Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is April 19th, 2024, and I'm here to bring you some key trading levels in the major market indexes. We'll take a look at the SPY, which is the ETF of the S&P 500. We'll look at the triple Qs, the ETF of the Nasdaq composite. We'll also look at the IWM, which represents the Russell 2000, and we'll also take a look at the TLTs, which is the ETF of the longer duration U.S. bond market, 20 years and beyond. So that's the agenda here for today. We'll look at this in the context of supply and demand levels based on mainly the daily chart as well as the 2-hour chart. Obviously, one could break this thing down into kind of intraday levels, 5 minutes, 15 minutes, but we're going to look at this from the context of swing trading levels. So that's the agenda here for today. Before we get going, the usual disclaimer for all of these things: Precision Trading Labs, we are neither money managers nor financial advisors. We work with our subscribers to help them become confident, competent traders, and everything that we present here is for educational and informational purposes only. Okay, so let's take a look at the charts here. Here's the S&P 500. For the moment, it's sitting here in the 2-hour chart here. Right here, we're looking at this green region here, which is sitting just below 495, between 490 and 495. This is an area of support. Prior to this might have been an area of demand where you had an imbalance between supply and demand. However, we've been now back here twice. This was an area of demand here. We've now been back here once. We've been back here a second time. So this is now tested demand. At this point, then coming back, we're now coming back here for the third time. We're actually down about 6% from this local high that occurred about a month ago on March 22nd. And so as far as I'm concerned, it wouldn't surprise me at all if we're going to fall a bit further to kind of this little area of demand here, which is about another 2% down. That'll take us down about 7.5%, 7.75%. If this doesn't hold, then we're down here, and at that point now we would actually be in the territory of an official correction. As we know, an official correction begins at the 10% mark. 20%, of course, would be a bear market. We're nowhere near that, fortunately, but 10% would be considered to be an official correction. So right now we're about 6% down. Another 2% takes us to 8%, and if this doesn't hold, then obviously down to the next area of demand here, that would obviously put us in a correction territory. So let's hope that does not occur. But nonetheless, I think that's what we're looking at here in terms of some key trading levels. All right, so that's the story with the SPY. Incidentally, in looking at the supply and demand, if you look at the link that's directly below this video, there is another video that I've done that covers supply and demand in a little greater depth. And so I would suggest you take a look at that for some further background, okay? So that's the story with the SPY. If we take a look at the Qs, here we go with that. The Qs are actually down about 7.5%. From that March 22nd all-time high here. So if we actually get to this next demand zone right here, right now it's actually sitting at kind of an iffy zone right here. If we were looking at a bullish market, or at least one that was not in this clear downtrend, it would be quite likely that we might actually get a bounce from this region. But because of the fact that we seem to be in a kind of a downdraft here, I would actually be looking for a bounce. And let me just blow this up here a little. I would actually be looking for a bounce right around here, because this is actually the origin of this very strong move here. Okay, this one is obviously sitting sort of midway, in the midst of this move, but this is the actual turn in price right here. Price came down from here and then turned and headed up from there. So this is actually, I think, where I would be looking for the turn, right, rather than here. I mean, today there was actually a little local bounce from here. But obviously, this is not a good day. We were down about 2% here, so this bounce was obviously fairly minimal here. I wouldn't be at all surprised if Monday was going to be another negative day on the Qs, and we would and actually head down to here. That would take us down to about another 2%, and then we'd be down about 9.5% from here. So we'd be knocking on the door at the front end of this level. We'd be knocking on the door of a correction. And if we actually got through to the sort of the bottom of this level, then we would actually be in official correction territory on the Qs. So I think retail traders, as well as the institutions, everyone's going to be kind of looking at this with great concern, I think, on Monday. So that's the story with the Qs. If things did actually rally here, right up here actually is a nice area that we would actually be looking to short if we ended up getting a rally here. There's a clear base drop formation here. We can see that there's a very clear consolidation here, and then that very bearish move out of here. So I would actually be looking for this to express a bearish trade out of here. And of course, to express a bearish trade, we could either simply short the Qs here or buy a put. So those would be the two simple ways of doing that, of course. So that's about 16, 17 points on the Qs above here if we happen to get a bounce from here. But like I said, I think it's quite likely that we're actually going to see this thing kind of pushed down to another 2% to this area of demand right here at around this 406 mark. So those are the Qs. If we take a look at the Russell 2000, here we are on this. This is actually more or less analogous to the above here. This is analogous to that level that I just showed you on the Qs. And so that's about 4% from where we are now. And this seems to have consolidated down here. But if we do fall a little further on the IWM, then right here, we actually have, I think, a fairly robust zone here. This is the daily on the IWM, and in fact, if I change this to a daily time frame here, we can very clearly say there's a base rally formation here. So we have a nice area of demand right here, and so that's about 3% down from where we are now. Okay, so we would need about a 3% drop to get to this, and then this would be a place where we could express a bullish trade. So that's sitting right at 187 even, down to about 183.5 or so. And then below that, there's another demand zone about 4% further down. Okay, but these are the two immediate areas that I'd be looking at on the Russell 2000. This is a daily demand zone here. Up here, actually, I guess we could really consider this a daily supply zone as well. I was going to say it's a 2-hour zone, but really this is legitimately a daily zone right here. So we have a daily supply zone about 4% up, and a daily demand zone about 3% below. So that's the story with the Russell 2000, and we'll wrap this up here by taking a look at the TLT, the longer duration bonds. So here we are. Right here, and this actually resolves, I think, in both. I was looking at this both in the 2-hour time frame here. Okay, so right here we have a rally base drop formation. Notice price came up here, and I'll just blow this up a little here. Price came up to there. We can then see right here these close very close next to this. That's where the turn in price occurred, and then we had a large gap, and then that moved down here. So I would expect if it gets up here, this would be a place where we could express a bearish trade. And then right here we have the drop base rally formation here. So we're sitting a short distance above here. So that demand zone right here, that's 1% below where we are now, and that supply zone here is about 3% up from where we are now. Okay, and if we go back here, we can see there was a demand zone right here. There's and then this is kind of really an area of support right here. But right in, like I said, right in between here, I think there is this area of demand here, right? So a drop, a base, and a rally there, and that's about 1% down. So we actually have two levels on the TLT that are relatively close together here. So I wouldn't be at all surprised if perhaps in the next week or so, one of these will get hit. So at any rate, that's what I got here. So this is Mitch Firestone with Precision Trading Labs, and I will see you next time. Thank you.